Welcome people to my new video. Apologize for my bad English. In this video I will talk about the Accumulation Distribution Line, the ADL. Now the ADL is a technical indicator, so a trading indicator, and volume based, an indicator that traders use in their technical analysis. It has been developed by Marc Chaikin. This is Marc Chaikin. And he originally talked about the cumulative money flow line. Later on, we started to call it the Accumulation Distribution Line, the ADL. So I will show you how you need to calculate the ADL, the Accumulation Distribution Line. For this you need to understand the OHLC, and the O stands for open, opening price, H, and so the high, the highest price, the L, low, lowest price, the C, close, closing price. You see candlesticks here, let's assume for a while this is from a daily chart, so this is day 1, day 2. And we start here the day with an opening price, and whole day long people trade, right, to the highest price, lowest price, and the trading day ends with the closing price. And here the close is higher than the open. So the buyers were in control. They pushed up the price. Day 2, so we start with opening price, whole day long. People trade, highest price, lowest price. And here the close is lower than the open. The sellers were in control. They pushed down the price. So that's why here it's red. Now there was another thing important for Marc Chaikin, and that's the volume, right? So what is the volume? Volume is the amount of shares that has been traded. Right? These two situations are not the same. Here the price goes up while the volume goes up, and here the price goes up while the volume goes down. The ADL, and so the calculation of the ADL, this consists of 3 steps. In step 1 we will calculate the money flow multiplier. In step 2 we will calculate the money flow volume. Step 3 we will get or calculate the ADL. First things first, we will start with step 1. We will calculate the money flow multiplier. So step 1, 3 differences are important. Close-low difference, that's this green box here. The close price minus the low price is this green box. Then the high close difference, and so the high price minus the close price is this red box. And then the high-low difference, and so the high price minus the low price is this box here, and this purple box here. How do we calculate the money flow multiplier? Well, the close minus the low, and so you take the close-low difference, you subtract from this the high-close difference, and you divide this by the high-low difference. And so this minus this divided by this. Now the close-low difference can be greater than the high-close difference. So here the close-low difference minus the high-close difference will give a positive value. Then we talk about accumulation. Now the close-low difference can be smaller than the high-close difference, right? So this minus this then will give a negative value because this is greater than this. Then we talk about the distribution, right? So now you understand the name of the indicator and the accumulation distribution line. So we can calculate the money flow multiplier, and this goes from -1 to +1. So the first extreme case, the close is the low, right? So the close price is actually the lowest price, right? So the close is the low. So remember the formula, the close minus the low, but the close is the low. So low minus low is 0. And that's why here this green box, this green area disappeared. Then the rest of the formula, and the high minus the close, but the close is the low. So you get actually the high minus the low, right? Divided by high minus low. This gives -1. This area divided by this area. It's the same order, so -1. Then the other extreme case, the close is the high. So the close price is the highest price. And again, we look at the formula. The close minus the low, but the close is the high. So we actually get here high minus low. Here the rest of the formula, high minus close, but the close is the high. So high minus high is 0. That's why this red box, this red area disappeared. So we actually get the high minus low divided by high minus low is +1. This area divided by this area, and they are the same orders, so +1. So we calculated the money flow multiplier. Now we will calculate the money flow volume. Step 2, and the money flow volume. How do we need to calculate this? Well, we take the money flow multiplier. Remember, we already calculated this in step 1. And we multiply this by the volume for the period. Money flow multiplier from period 1 and multiplied by the volume for period 1. Here in period 2, and the money flow multiplier from period 2, we multiply by the volume from period 2. The money flow multiplier from period 3, we multiply by the volume from period 3, and so on. But the volume here, in the market, in stock markets, emotions are important. Positive emotions, negative emotions, and like optimism, anxiety, fear, panic, and then so that's also why the volume is variable. In casino games there are no emotions. An RNG and the dealer just spins the ball, right? So there are no emotions. There are no happy spins or sad spins. The volume is constant here. So we calculated the money flow volume, and in step 3 we will calculate the ADL. How do we get the ADL? So you take the current period's money flow volume and you add to this the previous ADL, and you get the new ADL. Right? So here high, low, close. So we calculate in step 1 the money flow multiplier, and you multiply this by the volume, then you get the money flow volume. And so you start somewhere, so the money flow volume in period 1 is also the ADL from period 1. So now we go to the next period. Now this is now the current period. So you calculate the money flow multiplier, you multiply this by the volume, and you get the money flow volume. So this here is now the current period money flow volume. And you add to this the previous ADL. So here this is the previous ADL. So this plus this gives this. Then we go to the next period. You calculate in step 1 the money flow multiply, and you multiply this by the volume to get the money flow volume. This is now the current period's money flow volume, and you add to this the previous ADL. And so this plus this gives this. And so all these values, you can now put in a graph. And you get the accumulation distribution line. In part 2 I will demonstrate this in Excel.